Let's take a look at what happened this week as we look at the 60-minute chart of the S&P 500. And that is right here. Let's get that to come up. And of course, the gray area is the overnight area. The white area is the pit trading or regular trading hours during the day. And you can see here, way over here on the left side, as Apple started to move up overnight, and bargain hunting came in, this started to get a bit of a rally in the market. And Trump, that came despite the fact that he had ordered suppliers to build phones in the U.S. So, that started to get them weak, and then all of a sudden the market started to turn up again, and that is typically what we have seen. Give any reason for the market to go up, and it will. Just a little dip in here, buyers come in. That's pretty much what we saw. Monday was a choppy day, a little bit lower throughout the day. On Tuesday overnight, China asked the World Trade Organization for sanctions against the U.S. on the trade situation. But then on Tuesday morning, Apple jumps 5% ahead of that iPhone event, and the NDX had its biggest day of the week. And that lifted also the energies, which caught fire for a brief period of time, and a big move up in oil as the hurricane threatened coming into the Carolinas. It ended up to be not as strong as feared. Of course, we expect that it will have pretty significant damage, sadly. On Wednesday was the day that Mnuchin came out and said he's open to new talks with China. It got the market spiked on the upside and then just got choppy for the rest of the day. Apple started to dip. That didn't help the market after the iPhone event. Then on Thursday overnight, China came out and said they're open to new trade talks. The market moved up throughout the overnight session. After that, CPI came out only up 0.2, core up 0.1. That was really mild. And then POTUS came out here. You can see on Thursday, see that red down bar right there? He came out and says, I have no pressure to make a deal with China, and that broke the market for a few minutes, but then buyers came in. Friday, Evans came out and he talked about the economy being really strong, and bonds moved to the downside again. And then we got the news that Manafort pleads guilty and agrees to cooperate with Mueller on the Russian probe. The markets didn't like that, but they got really hit by the report that, well, the president really is ready to put that $200 billion in China tariffs on them, and then we see that big red bar again. So the market here on Friday down a little bit as we're just coming up to a couple hours left in the trading session. And that is a look at what happened during this week. A choppy week as you look at that, but choppy and moving up throughout the week. And of course, we're going to look at the stock market. Like I said, stock market we thought was going to dip and then rally. We thought it would get down to a support level around 28.45 and then rally back, and it would be just a small down week. Well, it didn't give that downside, and then when the rally came, it came with more strength on the upside, more upside magnitude than we had expected, and a much better week for the stock market. And I cleaned this up a little bit so our members will see that I made just a few little changes in here from when they got that last set of charts from us. And you'll see that on the bottom is a green cycle bracket, and the actual way that that cycle bracket traded is in green up on the top of the chart. And you will see the blue one, which is the one it was the dominant pattern it was following before, and then the blue pattern on the top of the chart. These are out of phase cycles, as you can see our note right in here. The green one is the one that our analyst RV has been looking at as dominance, and the blue one is the one I've been looking at as dominance. And RV's cycle is the one it's following perfectly. You can see that in here, as it's due to make a peak and turn to the downside in the next few days. Now, the blue cycle I'm looking at looks like that's going to make a peak a little sooner and then turn down also. We're in a week where both of these are, even though out of phase, are both pointing to a peak and we think that the risks have been increasing during this period. We're below this 29.16 peak we made 3 weeks ago, and now we think we're about to start to make some room and move to the downside in there. So we're going to look for this week to pull down. First support is the bottom of the slim ribbon. That's about 28.80 that you can see right there. That's important that you have slim ribbons on your charts, I believe, because you could see this upward momentum and that center line, the 13-day exponential moving average. That really is a key to what the momentum looks like, and momentum's still strong in here. This one looks to us like this coming week is going to be down. Like it'll try a little bit more in here, and then all of a sudden between the green cycle and the blue cycle, they're both going to start pushing to the downside. We're going to look for that 28.80 number, and then the next number is the center of this is around 28.60, 28.65. That's the range and the downside that we're looking at for now. And then probably if that happens, we get a bounce, and then the risks really increase as we get into late September through November, early December. That's when we think that there is the potential for much more downside. So end of the month, much more risk, upward momentum that you can see in here, keeping the market from giving a lot of ground in on the downside. So we think that the buoyancy that you see in the markets are likely to continue. I'm going to the city and I'm going to do a stage show. And I know all my fans want to learn how to make some dough. I've been creating